Hello traders, hope you're doing well. After 25 days, I'm making our analysis video, especially when our market is at all-time high level. Also, I wanted to discuss about at all-time high level, what is the current plan or view I'm having about the market. Now on Friday, you can see the US market has closed in positive. Everything is in green. Now Dow Jones, if you see, in the month of August, we could see a good rally towards the upside. Right now, it's at all-time high level. Nasdaq also has seen a decent momentum towards the upside. But some of the technology stocks like Apple, Tesla, all of these companies are definitely seeing pressure in the market. And I personally feel the entire market as of now is overvalued, or the entire US market is waiting for September month rate cut. They're just waiting to see if Fed chairman is going to reduce the interest rate by 25 basis points or 50 basis points. The market has already factored in the 25 points rate cut. Now, when Fed chairman make any announcement that there is going to be 25 basis points, people might get excited with an expectation that market will continue the trend. But please take this into consideration. There is a probability, according to me, the market has already factored this in. So we cannot expect bigger movement how it was in the month of August in the September also, even though rate cut is a positive news. The same thing is applicable in Indian market also. In the month of August in Indian market also, we could see a significant movement in Nifty, close to 5.5% or 1300 points. Now after the rate cut starts, when Nifty is already at all-time high level, we cannot expect similar kind of movement. So with that view in mind, I personally feel we need to approach the market in a different perspective. And at present, we need to say market has already factored in the upcoming rate cuts in the month of September. If it is 50 basis points, maybe another 250 points movement we can expect. But I don't expect Nifty to reach 26,000 level at this current point of time. As per long-term investor perspective, I personally feel it is better to not buy any stocks whose PE ratio is higher. I personally am identifying those stocks with lesser PE ratio where I'm seeing value, I'm investing. Apart from that, many stocks I have completely avoided because many stocks as of now is overvalued. Now if rate cut happens, one important thing what would happen, this will have very good positive impact when it comes to gold. When rate cut starts, US dollar value will reduce. In turn, gold price will increase. In Mint, there is an article about this. I've been speaking at least from last year itself. And if you're following our free Telegram channel, in gold piece, you would have noticed this 22% increase what happened last year. By buying gold piece, I have already captured that. Maybe if you go to our free Telegram channel, you will see all the details. Now on this channel itself from last year, you would have noticed many times I have spoken about gold piece. In the month of July only, we could see gold going up by 8%. Now after this rate cut, in the next 15 to 18 months, my expectation is move up by another 15 to 20%. Until then, you can expect some kind of volatility in the market. Since last year itself, we have entered in gold, we have captured this 20% at least. We are in the safer zone. When it comes to long-term investment perspective, only two things what I'm doing right now. One is looking at gold piece when it is undervalued. I'm accumulating that. And there are 5 to 6 stocks which I cannot discuss based on SEBI rules. So those stocks I'm accumulating slowly as and when it is available at a decent price, because the PE ratio of these companies are very reasonable even at the current market levels. Now when it comes to intraday, at least for the next 2 weeks, this is how I'm going to approach the market. We are going to follow some strict rules where when I get a buying opportunity, I'm going to reduce my lot capacity. Previously, if I'm trading with 10 lots, now I'm going to reduce it by only 2 or 3 lots, because I feel at the current market situation, as much as capital we have, we need to protect that. That's the first thing. Second rule which I follow is going to be 1 trade per day. So many times in our private Telegram group, I've been marking important support and resistance level, trying to understand where the market is setting trap. Based on that, when we're getting opportunity, I'm explaining that. So with that logic, only 1 trade per day. Third thing is not looking at the market after 2 p.m. because after that we can expect more volatility in the market. So these are some of the things which I am personally taking into consideration at least for the next 2 weeks in the current market condition. Now, generally, I've given you some information about how I'm approaching the market. Now, let's quickly jump into Nifty and Bank Nifty chart analysis. Traders, what you're looking at right now is a chart of Nifty 15 minutes time frame. On this chart, you can see I've drawn a trend line because many times it has acted as good resistance. And this trend line has been the recent supporting area. One more reason why I've drawn this trend line is because at the current zone, 0.236 level is where market started to show continuation in the trend. On Friday, market was just consolidating within a range because we are already at all-time high level. People will not have that confidence to buy in the current market situation as long as there is no any positive news. What is the positive news? People is expecting rate cut in the month of September, but expectation is Fed chairman speech is going to be somewhere on 17th or 18th of September. So at least another 15 to 18 days we would have to wait for this positive news. So definitely we can expect volatility when market is at all-time high level and overvalued. From the month of August, what has happened? Market trend has been upward direction. Now, when will this trend change? This trend might change when market goes below 25,000 level. Why do I say that? You see, 25,000 is a psychological area in the market. Many investors might now believe that market will hold 25,000. The next level is 25,500 and later 26,000. But at some point of time, let's say market opened with gap down, started to go below 25,000, this will create panic for investors. They might start booking their profit because now market created a high, low, lower high, and then a lower low. With an expectation of trend change, people might start exiting from the market where market has chance of correcting up to 300 points. This is something that we need to be very careful in the current market situation. Now, as per Gift Nifty, it is expected that our market will open positive. Let's say the expectation is market will open with a gap up. Now we know there is a trend line here which is continuously acting as resistance. Now tomorrow if market opens with gap up, we will extend this trend line and see how market is reacting at this area rather than looking for call option. At all-time high level, usually the movement will be slow towards the upside, but if it falls, the movement will be very quick. So completely avoiding call option trade if market opens with a gap up, according to me, is good idea. But what if market opens within this range? Friday market was just within this range, trapping retail traders. So even if we enter here, doesn't seem like a good area for us to plan our trade. In case market opens with gap down, you can see there was a gap here. Market might try to fill this gap and then quickly reverse after trapping put option buyers at this zone. So the safest place for us to plan for a put option trade would be market comes down, fills this gap, retest. Again, if it gives a breakdown, then with small stop loss, this is going to be the first attempt where we will plan for a put. If market moves towards the downside, 0.236 level is where we will be planning our exit. In case market opens with a gap down, breaking previous day low level, then simply what we will do is from recent swing low to swing high, we will draw the Fibonacci level. In case market opens with gap down below 236 level, I personally feel it is better that we wait for some more time because there are two trapping zones. First is this trend line, or after breaking this trend line, market can start forming higher lows and higher highs and again move towards the upside. Here what the market is doing, it is trapping retail traders. Later it is giving a breakout respecting 25,100 level from where we can expect a reversal in the market. So these are the two areas where we need to be very careful and expect a reversal. This I'm saying only based on the recent swings in the market. For many people, the best thing that you can do is wait until 10 a.m. Let the volatility in the market settle. Based on that, when market comes to our support or resistance level, we will be looking for reversal setup. What are these reversal level? That I will be discussing in the private Telegram group during the live market tomorrow. Now this is the simple approach we are going to have in Nifty. We are going to trade with less quantity. We are going to wait until 10 a.m. and we are going to see how market is going to react near our support and resistance level. Based on that, we'll be looking for any trade. But when market comes to our support or resistance post 2 p.m., we will completely avoid taking any kind of trade within this range. So during the first half itself, we will try our best to capture the moment. So this was about Nifty. Let's look into Bank Nifty. Traders, what you're looking at right now is a chart of Bank Nifty 30 minutes time frame. While Nifty is at all-time high level, Bank Nifty is still struggling here. You can see it has been just trading within a range from quite some time, and Bank Nifty has so much space to move towards the upside. But since the entire banking sector is underperforming from quite some days, it is creating some kind of pressure for Bank Nifty. That is why in Bank Nifty, it is wait and watch game. We have marked a range. Market is finding it difficult to go above 51,500 psychological level. So if market breaks this level, retest again, if it breaks the high, we can expect Bank Nifty movement towards the upside to continue. That is why we'll be looking for call option trade. In case Bank Nifty goes below 51,050 level, previously this area was acting as support. If it breaks this level, retest and moves towards the downside, we'll be looking for put option trade between the zone 51,000 level and 51,500 level. This 500-point range is where I personally believe it is better that we completely avoid taking any kind of trade. This is the view about the market as of now. In case my view changes tomorrow, definitely during the pre-market report, we'll keep you updated in the free Telegram channel. During the live market, I'll share my view in the private Telegram group. Now traders, it takes a lot of time for us to create such videos for you. If you enjoyed this analysis, then share your support by liking the video and subscribing to the channel. If you think this content will be useful for your friends, please share it with them. Now that's all for this video. I'll see you in the next one.